I coach high-income Medicare clients every single day, and there are 6 specific things that people with IRMAA, or the Income-Related Monthly Adjustment Amount, need to plan for in advance, and most people have never heard of these things and know what to do with them. So let's go through all 6 of these on this video. I'm Emily with the Medicare Coach, and before we get into this list, I want to be clear, this is specifically for those of you who do have higher incomes. Medicare has what's called IRMAA, Income-Related Monthly Adjustment Amount, and it's a high-income Medicare penalty that applies to both Medicare Part B as well as Medicare Part D premiums. And when your income is over a certain threshold, you will pay more for your Medicare coverage. Now, the unique thing about Medicare and these income penalties is that they look back 2 years ago from your income. So your 2028 Medicare premiums will be based on your 2026 income thresholds. Now, as of now, the threshold for having a high income penalty is if you're filing single as a single person, the income is around $110,000 a year to pay more for Medicare. Now, if you're filing jointly, right, as a couple jointly, it's around $220,000 or more, and you pay more for Medicare. Now, if you are married, filed separately, you will pay a lot more for Medicare. It is the same threshold of around $110,000, but if you get over that threshold, you pay so much more for your Medicare coverage. So there are things to think about with your CPA when it comes to Medicare as well, but those are the thresholds. And again, as I'm recording this, it's around $110,000 as an individual, $220,000 as a couple, but they do change every single year. Now, when we work with high income people with this threshold, we do a couple of things. Number one, we ask them, well, what was your income from 2 years ago? Do you expect for it to be over this threshold? And if they say, yes, I do think so, we will start having those conversations. We want to understand, what was the reason for your high income? Was it because you were working? Is it because you were taking money out of your 401k plan? Was it because you sold a house? Did you inherit money? What was the cause for that high income? Secondly, we want to understand, has your income changed? Has your income gone down? Now, if your income has gone up, we can't ask for Medicare to reduce your penalties. But if your income has decreased, if certain situations apply, you can absolutely ask Medicare to reduce what you are paying for your Medicare coverage. Now, not all events apply. So for example, if you're doing, say, a 401k or Roth conversion, you're having income coming out of your 401k account, you're not usually guaranteed to appeal that or to request appeal because it's not a true qualifying event. Usually in order to appeal reducing your income penalty, you have to have a work reduction or work stoppage, which is the most common things. Now, we help our clients prove that this is happening and help submit that appeal. But my point is, you have to have an event that's happening in order to appeal it. For example, we've had people who got money from inheritance, selling a home, again, Roth IRA conversions, 401k distributions. You cannot usually appeal those events if they're happening on their own. So when we work with clients or even their financial planners in advance, we help us all think about what are the implications of these income spikes. I'm not opposed to having people do the income spikes. I think it's just good to understand the implications on your Medicare to avoid surprises in the future. I had a client who took out money out of her 401k plan to buy a condo. Her advisor had never told her the Medicare implications. She was absolutely furious once she joined Medicare because she would have made different decisions had she understood the Medicare implications. So I'm not saying you should not have an income spike, but I think it's important to understand what those implications are so you're making a well-informed decision. Now, once we have clients who have these high income penalties, these IRMAA penalties, there's 6 other things that we're going to look at because they oftentimes coincide with these high income penalties. So let's walk through what these 6 things are so you know what to look for as well. Now, when it comes to our high income clients, most of them will be having an event like moving or having homes in multiple states. So when we have clients with a higher income, we tend to ask these questions, right? Do you intend to move? Do you intend to have homes in multiple states? What's happening there? And that's an important thing to ask because when you are moving or when you have homes in multiple states, there are some unique rules to be aware of. Now, for example, if you plan on moving or have homes in multiple states, different states do have different rules. Now, when you move states, it is very easy to both change your Medicare Part D or your Medicare Advantage plan. But you are not guaranteed to change your Medicare Supplement plan, so you want to think about that thoroughly. Also, when you are moving or have homes in multiple states, you might have doctors in multiple locations as well. And that can also impact your overall Medicare decision to have that best coverage no matter where you're at. Now, number 2 is traveling. Many of our high-income people have plans for travels, whether it be domestically or internationally. Now, within the US, Original Medicare covers you quite well across all 50 states. Advantage plans can provide coverage, but it can get a little bit tricky if you have anything besides a non-emergency that gets a little bit more specific and you have a long-term hospital stay. So usually our clients who are traveling domestically tend to be best on Original Medicare, but there can be some nuances to that. Now, if our clients are traveling internationally, it doesn't usually impact their initial Medicare decision. No matter which path you go down, Original Medicare or Medicare Advantage, it doesn't have great international coverage. So when we talk to clients who either have a home in another country or they're traveling to another country, there are different conversations to be having when you're traveling internationally. But again, many of our high-income clients will have the situation as well. Now, another thing we're going to be looking at is your doctors, okay? Many of our high-income people have unique doctors, whether it be concierge doctors, functional medicine doctors, other providers who don't take the normal types of health insurance. So if you're in this situation, we want to understand who is your doctor. Like me personally, I use a functional medicine doctor. And while my doctor does not take any health insurance at all, she actually loves once her clients are on Medicare because certain Medicare plans will cover those functional medicine tests better than other Medicare plans. So we want to understand who are your doctors, how does it impact you, because it will impact your Medicare decision. Now, number 4 is an HSA account, a health savings account. We tend to find that many of our high-income clients will have a health savings account. It's a tax incentivized program, kind of like a 401k plan, where you can use this HSA money as pre-tax money for approved medical expenses. Now, I love an HSA. I think the tax benefits are fantastic, and you can use your HSA money for certain things once you were on Medicare, but there are some rules around how HSAs and Medicare work. And so if you have an HSA account, we want to make sure you're stopping your contributions at the right time, or we are delaying your Medicare to the right time as well. There needs to be kind of coordination amongst the two of these things, but we want to leverage all the tax benefits to get the most from your health care as well. Now, number 5 is long-term care and critical illness plans. Many of, again, our clients with IRMAA penalties will be thinking about both long-term care, critical illness, or already have a plan like that. Now, I cover this in more videos, but Medicare does not cover long-term care needs, custodial care needs. Medicare will cover medically necessary nursing services, but it is different from, say, the long-term custodial care to be fed and bathed as well. So long-term care can be something to consider. It's usually more of a financial planner decision because it has to do usually with your overall assets, your overall income, more so than Medicare, but it's important to know that Medicare does not cover your long-term costs. Now, I oftentimes, on this similar topic, get questions about critical illness policies or cancer policies. And people will say, well, should I get a critical illness policy or a cancer policy? And I say, again, it depends on you. Most of the time, we'll work with our clients' financial planners to kind of help decide what makes the most sense with their overall financial plan. But many times, be careful about critical illness policies or cancer policies. Many of them do pay a smaller amount once you turn 65. So again, I cover this in more detail in other videos, but it's something to consider as well when it comes to your other additional policies to consider alongside Medicare. And then finally, number 6, there are special things that our high-income clients should be thinking about when it comes to your decision. In most cases, our clients have saved quite a bit of money, at least $500,000, and they don't really want to go bankrupt. Not that anyone wants to go bankrupt, but the thing is, when you do go bankrupt, Medicaid can kick in and help cover your costs. So Our clients with higher incomes don't usually want to go bankrupt, not that anyone does, as I mentioned, but there are things that we're going to do for our high income clients to give them better options, to avoid unpaid bills, to avoid unpaid doctors, to avoid those big catastrophic costs that can absolutely derail their financial plan. We had a client once who came to us who wanted to see a doctor out of network. He picked a Medicare Advantage plan initially. That was not the right thing for him to do. So he came to us for help, asking what could he do anything. The thing is he couldn't. So he had to decide, did he want to pay over $200,000 out of his retirement savings to see his preferred doctor? Or did he just have to stick with his in-network providers that was not his first choice? So my point is, when we work with high net worth people, we think about those long-term implications. And because of how Medicare's guarantee issuance rules work, we do want to think about protecting those big financial risks so we can protect your money, which will ultimately protect you and your family. So again, Medicare is a little bit unique when you have these high incomes. We do it all the time. There are things to look at, but Medicare can still be great when you have a higher income. Make sure you follow along for more inside tips to help you easily make your right Medicare decision.